Welcome to Stock Talk on May 30th. It's currently 4:11 p.m. Eastern Time. We have a lot of things to go over today. We have a couple of things in which we changed the outlook from yesterday's video to today's video, and we will talk about all this, including commodities and market movers, as well as your own tickers that you guys kind of talked about. So let's start with SPY on the 180-day chart, which tracks the S&P 500. So I have put in one line and I have deleted some other lines. The line that we put in is actually this lower high line, which has been acting as a bearish resistance area until we crossed over during this day. And note that we held over this resistance line and we started this horizontal consolidation pattern between the support and the resistance, these channels, right? So yesterday we saw that it broke under, but we formed these two tail candles. You guys see these two tail candles, which were actually representative of the bullish reversal pattern, right, guys? We broke over the bearish resistance, and now we are forming a more bullish pattern. So even when we broke this channel yesterday, we held the support. Look how we held the support, which was the lower high line, and now we're coming back up. So what are we looking for in the near future? We retested the support. We reconfirmed that we are still on an uptrend. We can still expect a resistance at 274 and a support around 270 to 271. Okay? What's a little less relevant? Well, what's a little less relevant now are the 20 EMA lines, right? The 20 EMA lines aren't really telling us a good story. In addition, the SMA lines aren't functioning as support or resistance areas right now. The major support and resistance areas are this lower high acting as a resistance. It's a red line just to show you the degree of, the magnitude of how important this line is, as well as a support line at 270, 271, and a resistance at 274. That has not changed. So we are looking for resistance still there, and at the same time, we're looking for a resistance at 277. Should we start breaking out and breaking above this 274 area, we would expect another resistance around 277. And let me just take a look really quickly at what is occurring right now with the markets. Okay, so right now we're just kind of doing some horizontal pattern action. Okay, I'm just curious because we are in the aftermarket hours. So there we go, right? Here's SPY, and very nicely we have gone back on an uptrend. So can you guys buy into TQQQ or UDOW or those stocks or ETFs that follow the market? I think now that we've kind of confirmed this bottom right here, confirmed that, okay, we are still on the uptrend, we can still find a better position than what we can buy in right now. Note that we are at 270, 261, and we could still be fluctuating between the support and the resistance. So a better buying area would once again be around 270 to 271 and selling near the resistance at 274. So we're still in a bullish pattern. Looking at the 1 year chart on SPY, we see some pretty similar patterns. Note that we are still in a bull flag pattern. Yesterday's drop, look at this gap that was made on yesterday's drop. And what happened today? We not only covered this gap, but we went above its previous close. That is a very bullish sign. As you can see, we kind of, gapped up today. So this is an extremely bullish sign, which shows that the bull flag pattern, right? Here's the pull, the flag, and now we expect another push up. Regardless of when, it might be early June. Remember, we're nearing the end of the month, and in early June, we can expect or soon another leg up. This is a bull flag pattern. So just letting you guys know that we are still in a bullish state. So I'm looking for an entry into TQQQ and those ETFs, and hopefully you guys are kind of finding a similar pattern as well. So looking at TVIX or volatility, this was an interesting pattern because yesterday TVIX, or volatility, spiked up 22%, and now we're back at the 20 EMA line, and we're nearing the previous support area. Actually, the support area is situated around 475. It might not get that low. So if you guys can imagine something like this, right? SPY is at 272-ish. The resistance is at 274. Pretty close. So if SPY isn't able to break 274, it comes back to retest 270 or 271. We can still expect volatility to go up a little bit. But the general trend is, if we're in a bull flag pattern for the markets, we do expect volatility to start going lower. So even though we may see this horizontal consolidation or maybe another possible spike up, should we keep over the support, we would expect volatility to continue decreasing. Note that there is a possibility of getting to 474 and even lower given today's market movement. All right. Let's take a look at crude oil. Here's 4/CL. Here's another outlook that has changed from yesterday. Crude oil has been making this higher low, right? You guys can see this line, higher low on the 180-day chart. So we consolidated, we made a double bottom here, and all of a sudden we are now reversing back up. All right, so what does that mean? Well, that means that crude oil certainly has reversed, number one. There's a good buying opportunity for crude oil, okay? So if you guys got in today, I think it would have been a great idea. If you guys were following the trend, look how we broke over the 20 EMA, how drastic we broke above. The one thing to keep in mind is we do have a resistance around 69.32, which is less than $1 away from where we are right now. Here's 69.32. It's acted as a previous resistance, but look at this, right? We had this massive decline. Can we get all the way back up there? Well, that's a question for another day, but just remember, we do have a resistance around that area. So I'm once again pro GUSH right now. It might come back and kind of retest the 20 EMA, and should it start bouncing back up, that's when you can take a position on GUSH. So look how GUSH or GUSH gapped up today, right? Back over its 20 EMA, and now here we are once again. We're pretty much at, if you guys recall, last week we had crude oil reports coming out, right? Or crude oil inventories coming out. What happened during then when the inventories came out? Well, crude oil started plummeting, right? It plummeted to around 39.80, and then we saw it continue to decline. So one thing to keep in mind is tomorrow at 11 a.m. Eastern time, we have another crude oil inventory report. So this is just something to watch out for. We have crude oil reversal, at least in the short term right now. We know that there's a resistance around 43.84 and certainly at $46. There's still a ways to go for crude oil. So there's some money to be made. That's what we're looking at. Let's take a look at the 3-year chart. We're pretty much seeing us. Actually, I want to show you guys the 1-year chart. You guys see the 1-year chart? How we kind of gap lower, and all of a sudden we filled these gaps. Now there's still a couple more gaps to fill, right? So crude oil still has a couple of legs to go, looks like. On the 3-year chart, let's take a look, right? It's been making this lower high. We reconfirmed that this support right here, which is at 33.73. We didn't get all the way down there. It doesn't have to get down there, but we know there's a support around that area because this was the start of the gap down area, right? When we started declining, and this functioned as a support here. It functioned as support on this candle, and now we're kind of going back up. So very bullish for crude oil right now. Looking at DRIP, I just want to kind of give you guys a holistic approach of just every single ETF in stock we're looking for right now. So here's DRIP, right? We fell below the 20 EMA line, and now we're heading back to the bottom. So I think one of you asked me, well, when's a good time for a DRIP entry? I think today was a good kind of confirmation that DRIP is not a good play, at least not for right now. We don't see a good reversal. This could have been a reversal, right? It could have been, but look at how we sold off the first 4 hours, and at that point, you should have stop lossed out. around 661, and then yeah, went pro GUSH at least. So there you go. That's what we're looking at least right now. Just note that we do have a bottom at 559 for drip, but this is not a very definitive support, as you can see. So let's take a look at 4/NG, tracking natural gas futures. We know that natural gas has been incredibly bullish, and we're kind of holding this pattern right now of a support. But I don't want to put that in line because that's a little too optimistic for natural gas. Here we are on the 180-day chart. We know that's been making higher highs and higher lows. At the same time, we're near the middle of the channel, right? Between its high and its low. And we know that there's a support around 2.845. Natural gas can still come down a little bit before we look for a position into which ticker? UGAZ or UGAZ, which goes into natural gas. So natural gas is bullish, but let's wait for an entry into that ticker. 4/GC, which tracks gold futures. Gold really hasn't done all that much in the last few days, and you guys can see that we've been pretty much consolidating pretty much at the resistance area. This is not the best time to buy in because we can still get rejected and come back down. It could even go back up, right, and break the resistance. It's just not a very good place, in my opinion, to buy in, at least right now, because we're at a place of uncertainty. We could have bought in near the bottom. How did you know this was the bottom? Well, when it started consolidating at this area, you could have taken a position and put a stop loss lower. But again, this is just something that we should watch right now because we're near the higher end of the resistance, right? So let's wait until we take a position on JNUG or JNUG, which tracks gold futures, right? Looking at gold futures, we know that it's been making higher lows, and now we've broken under this area, and now this channel no longer looks very applicable, right? So we're actually thinking, I'm actually thinking about removing this support line. So we're actually holding this more horizontal pattern right now. So this is the new support area. All right, guys. So that's what I'm seeing right now. Let's take a look at some of the tickers you guys called out. Reza, how are you doing? I see you in the channel all the time, so that's great. Can you please go over IQ, great technical analysis? Well, yeah, so, you know, all these technical analysis, it's great to go by fundamentals as well as technical analysis. Here, we just kind of talk about technical analysis just to show you guys the charts. But I do hope that these are helpful. We're not going to be right 100% of the time. We're not even going to be right 90% of the time, right? But we want to be right as much as possible. If we're more right than wrong, which means if we're more right greater than 50% of the time than we're wrong, then we can still make money off of the stocks and ETFs, right? So just be disciplined in terms of, you know, I am calling out these tickers, kind of showing you guys the patterns, but we might not be right all the time. And this is just the reality of the stock market. If we were right all the time, everyone would be, you know, millionaires, right? Everyone would have a ton of money, and that's not the case because we know most people lose money in the market. So just keep that in mind. IQ. Okay, so I'll go over this one. So IQ, looking at IQ, we have on the 180-day chart, we have a massive spike up, right? Look right here when we spiked up. And then we had to consolidate back in the 20 EMA and actually the 50 SMA before we came back up again. So I can almost start arguing that we are nearing the territory of a short sell because it needs to start coming down and retest. Are we going to go short sell right now? Well, I wouldn't want to right now because there's no signal of a change, at least not right now. We know that it's overextended, but we need to look out for the red candle that kind of prompts us that we can start short selling this one. But right now, right, can you guys see that? It's making this candle, this is the day candle, and we can still, you know, go a little higher before we kind of come down and consolidate. So let's wait. This one, what chart would you like to look at? Ask yourself, is the 1-year chart more representative? Is the 180-day chart more representative? So the answer would be 180-day chart, right? So this is more representative line, and you guys can see how we're so overextended. I'm actually kind of surprised that we haven't dropped back to the support yet, which is around 1750. So It went up 11. Yeah, this is one to watch to short sell for sure, because this way, you know, the way it's going up right now, when it starts dropping, it's going to drop a lot and very quickly, and there's a good possibility that it could even drop to 1733. And that's just my opinion, but just be on the lookout for that. At the very least, we would expect a drop to the 20 EMA line. So, hey David, thanks. Can you cover TMUS? So TMUS is T-Mobile, and this is one that we've talked about before, because you can see on T-Mobile on the 180-day chart, it's been consoliding at this area, and now we're kind of going lower. Note how T-Mobile is actually kind of struggling to get up. We had markets pulling up significantly higher today, but T-Mobile kind of just, you know, stood at its support. So I think it's okay to get in at the support for $55.79 for T-Mobile. So there's probably another 80 cents to go. In terms, for me, a comfortable buying position for T-Mobile before it starts trending, or, you know, should it start trending up. Make sure you do set your stop loss a little tight, around 1.5%, so that at least your position would be more comfortable. I think right now, if you guys really wanted to take a position, wait for that reversal, wait for those green candles to start popping up and start trending over the 20 EMA line. Know how we're below the 20 EMA line. Just wait for it to start reversing back up. But right now, right, there's possibly a better position to go back. Let me see. Yeah, there's probably like a 0.5% left for it to drop, and you guys can take a position if you want to. The Giants. I'm interested in buying DRIP. What price is a good entry point? So yeah, we kind of talked about DRIP. You know, we thought that DRIP, so we're not right 100% of the time, right? We thought that DRIP possibly could start reversing at this area. It did not reverse, and now we're back down. So at this point, we are pro GUSH. Okay, so yeah, exactly. So I think Lee, and Simply Jeff, you guys are exactly right. I think a lot of the movement could be attributed to, oh, there's the Italy situation, right? And then that's why the markets came down. But honestly, like, the news can also impact. So, for example, I feel like the markets don't follow the news, right? The news really follows the market. And what does that mean? That means that when the markets go down, the news will find some sort of reason to compensate, to talk about, oh, this is why it went down, right? The markets went down because, oh, the trade war is also back in the question all of a sudden. So sometimes, and I feel like in most cases, greater than 50% of cases, the news end up following the market, which is why I kind of like to rely on technical analysis over at least the news. I like to look at fundamentals as well, but like definitely over the news, because we can't really rely on that based off of our trades, because then we're kind of trying to catch up with the news, and people buy on the rumor, sell on the news, right? So we don't want to kind of lag behind. All right, that is it for today's analysis. Thank you so much for watching. I'm just kind of looking at crude oil right now, but thank you so much for watching this video. I will see you guys tomorrow, Thursday, for another market analysis. I hope this gave you a better perspective, as a well-rounded perspective as to what is going on with the markets in the near term, and as well as you know, the more bull flag pattern that we see in the markets right now. So thank you so much, and I'll see you guys tomorrow for another stock analysis.